Hello. Today is March 20th, 2024. I'm Jason Shapiro with Crowd Market Report, and here is my closing thoughts for the day. So today clearly was Fed Day, and they basically did shit. Um, these are the two things that I think people need to think about today. One, the market is closing on all-time highs. The Dow, the S&P, the Nasdaq are on all-time highs. Don't be short all-time highs. I've said it a million times. Okay, and if the S&P's gap down 30 points tomorrow, well then whatever. Be mad at me, but you know what? They're up 47 today. So don't be short all-time highs. I don't give a crap if you think the world is coming to an end and there's a debt crisis and there's a political crisis and there's wars. The market is at all-time highs. Don't be short. That's number one, I would say today. Number two, I would say today, and this kind of goes back to this video that I made a few weeks ago, this contrarian macro view, the market breaks the Fed, where my theory is that the market is going to break the Fed because interest rates are in fact too low. If interest rates were too low, then what would happen? Assets would be ripping, okay? And that's exactly what is happening. Assets are ripping. Stocks are at new all-time highs across the board, not just Dow, S&P, Nasdaq, but DAX, Nikkei, Euro stocks. They're all at all-time highs. Gold, basically all-time highs. Silver, okay? That's what happens when interest rates are too low. To say that the Fed is going to cut rates, I think, at this point is ridiculous, okay? I understand that people want to believe it, but the markets are saying to you, if they're going to do that, then assets are going to rip. And that's exactly what's happening. This is not my guess. This is what markets are, in fact, doing. Okay? And if we look, the 30-year bond was flat today. All right? Which is what should happen in this situation. All right? Because short-end rates have to stay anchored to what the Fed is saying they're going to do. Whereas long rates do not. Long rates will discount in future inflation and future growth. And that's why long rates, okay, are not doing what short rates are doing. Long rates were flat today, right? Oh, but this should be bullish off bonds because Powell was, kind of dovish. Well, it shouldn't be bullish the long end. And the long end, to me, is not where you want to be, all right? I'm not short it just yet, but all the markets are saying the same thing. And I'm no economist, but the markets are telling you rates are too low. So that's the lessons from today to me. The markets are speaking pretty freaking loudly. All-time highs. Don't be short. It's the best piece of advice I can give anybody, all right? Over time, being short an all-time high in anything is a mistake and it's going to kill you. Stop doing it, all right? Think the market's going to crash? Fine. Wait for the market to confirm it first. Wait for it to go down. Wait for it to cross a moving average. Wait for it to do something. I promise you, you're not going to wake up and the S&Ps are going to be down 300, all right? It's never happened. And it's not going to happen. Stop being short, all-time highs. All right, thank you. Hope you had a good day. Hope you're having a good week. Check us out at crowdedmarketreport.com, and we'll talk again tomorrow.